and welcome to Money, 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 your weekly personal finance date with me, Surabhi Upadhyay. We are in a brand new year, and any talk about investment or wealth planning is incomplete in India until one touches upon real estate. Even though the last few years have seen a lot of traction in financial assets, property does remain on the average investor and home dreamer's radar. So will 2019 prove to be an actual bottom for the sluggish realty market? Should you look at long-term investments, or is it best to perhaps still steer clear of this asset class this year? Joining me to take this very interesting debate forward are Gulam Zia of Knight Frank and Samir Jasuja, founder, Prop Equity. Gentlemen, thanks very much for joining in. Season's greetings to you. First of all, Happy New Year. And this is really the question that I think people really want to ask, whether one can start making money by investing in real estate again. I'm going to open with you. Your first thoughts, Gulam.
Well, my thoughts are still very, very negative on real estate.
As you have been, I think, over the last 2 years that I've been speaking here.
And at least I am not proved wrong yet.
Yes.
And I want to believe that even coming year, I won't be wrong, because I firmly believe that this asset class is still not really making any sense to me compared to, yeah, maybe you know it better, but many other asset classes may look better than real estate in times to come. At least for a year or two, at least my vote is against real estate.
Okay, so sticking to that bearish call, that's what Gulam's view is to open things out. Samir, season's greetings to you as well. Let me get your initial thoughts.
Wishing all your viewers a very happy new year, first of all. Well, my thoughts are, from an investment point of view, slightly similar to Gulam's, but I strongly believe that this is the market for the end user. Real estate has started to bottom out with respect to completed projects. It's very important today that the residential real estate market has got 3 buckets now, and it's very important to understand all the 3 buckets before you make that big decision. The first bucket is with respect to ready properties. Now, ready properties, because of the lack of execution of developers, is continuously seeing a large amount of absorption by the end users, and that's the market where I see you're going to start seeing some traction and some appreciation as well with respect to the under construction properties that are nearing completion. Now, thanks to the NBFC crisis, I'm going to come to the second bucket of the category B developers, where there is a lot of pain. NBFCs had bailed them out, but having said that, now starting with 2019, with the NBFC trouble starting, these developers are going to find it even more difficult to complete those projects, and those projects are going to see a lot of pain. Lastly, coming to the new under construction projects, these are new launches with respect to branded developers like the Godrej, Tatas and the DLFs of the world. Those projects are witnessing a significant amount of traction. They are being launched at competitive prices with the right sizes, and that segment is seeing a good amount of offtake, and there is subvention schemes there also. So the risk involved, A, because of branded developers, B, because of subvention schemes, is quite mitigated in that fact. So my vote would be that go for ready properties. You may witness some slight appreciation there. And the other part is, if you're a long-term player, then you can go for under construction properties, which are new launches by branded developers.
Okay, that's a lot of advice, Samir.
Over the next 3 to 5 years.
That's, I think, a lot of advice packed into the first answer itself. We're going to come to a lot of these issues bit by bit, step by step. First things first, let's just take a look at numbers and data so we have the right context. Where do we stand at the end of 2018? Now, Gulam, I was looking at the report that you guys had put together recently, and it seems that sales have moved up, I think 6% on a pan-India basis. Unsold inventory is coming down. So therefore, my original question that, are we anywhere close to the bottom? But run us through the data and the important numbers that we should look at.
Yeah, you have just captured the essence of this. As far as residential real estate is concerned, the year was pretty stable. Like, we haven't seen much. If I'm talking about a 5-6% of increase in sales, it's not something yet to sing and dance about. If I'm talking about some tapering off of inventory, once again, not a sign to look at this real estate asset class with so much of exuberance, etc. So these are, to me, very nominal small signs of things at least falling into place. Now, obviously, the very next question is really are we really seeing the bottom of it? Well, on the other side, the price fall is still happening.
Okay. On a pan-India basis, what did the numbers throw up? How are prices, residential prices shaping up?
The price fall, except for New Delhi, I'm talking about the whole of NCR market, and NCR market has seen mayhem for last almost about half a decade.
Yes.
So now it is showing some signs of stability to me. Whatever price rise that I see over there, whatever couple of percentage points, is still only a sign of things coming back to normalcy. Rest of the country is more or less falling down. Especially worst hit is Mumbai. Mumbai continues on a downslide, and that is something which yet I don't see any end to it. And the other markets, like whether it is the southern IT markets have done slightly better. The southern markets, whether it is Bangalore, Chennai, Hyderabad, etc. Hyderabad is one market where the price rise has been the highest so far. But once again, that is because last couple of years, barring last a year or two, have been very bad because of political upheavals in that location. So these are a few markets where prices are also not giving me much of comfort to tell an investor to go ahead and take that plunge. So to me, none of these data points that we are looking at are actually leading our way towards a good case in point for making real estate as an asset class.
Okay, fair enough. Some of the numbers are going to be flashing in front of you. Some of the pockets that Gulam is speaking of. For instance, if you're looking at the Mumbai market, then unsold inventory, according to the Knight Frank numbers, is actually up 9% in 2018 in the Mumbai market, whereas prices in Mumbai are down 7%. Samir, let me come to you because you've been collating data as well. Are the trends pretty much similar to what Gulam pointed out?
Oh, well, we did just recently come out with that report where we also said that 7% increase in sales, and that's owing to the ready units that have got completed over the last 1 year, and their primary stock lying with the developer because sales were very low. The under construction properties of the past still continue to suffer, but yes, the inventory overhang has come down by 10% compared to 2017. In 2018, the sales have gone up by 7%. So really speaking, the green shoots are clearly visible because of lack of supply in ready build properties, very few coming up, and a lot of under construction properties in 2019 that are going to be completed are still going to see further delays because of lack of funding.
Okay, that actually is the second issue that I want to touch upon, the lack of funding that Samir is talking about, because this NBFC issue that manifested in late September on to October. What we're given to understand is that now there isn't easy finance available unless you are a top-rated builder, unless you have a good track record. What will this mean for the property market? Are we looking at the possibility of a serious price cut? I don't want to use the word crash, but a serious cut.
That's true. The funding situation for real estate has tightened in last couple of months, and NBFC crisis obviously that we are referring to. But when it really happened, when it really fell on us like a ton of bricks, that was somewhere near the festive season of Diwali, Dasara types, where somewhere around September, October, November to be precise, when things really went completely haywire. But even then, we didn't see much of a price fall per se. Yes, the sales had slowed down. But let's also understand that NBFCs have exposure that they have taken to real estate by funding earlier. So any price fall will have serious erosion in their values and their investments, etc. And obviously there will be best of the minds working on it to ensure that their monies are not suffering. So that is where I don't see much of a price fall happening, and which is what we have seen. And the way I look at it, we have almost passed over, the crisis has passed over, and what we are going to now talk about is, of course, tightening of capital situation shall remain for some time. But then in terms of any huge meltdown, etc., at least I don't believe it. Could have some effect on the prices, but not something which will actually crash or bring the prices suddenly down.
Samir, your thoughts on this issue? Is the worst of this funding or liquidity crisis over? And if at all we're going to feel any ramifications in 2019, what should a buyer be prepared for?
Sulbi, it's very important to understand also, that the buyer is not really wanting to take a risk with respect to these under construction properties of category B developers. So even if the prices were to be brought down by the developer, he is not going to see a sale. Plus, the second problem that the developer gets faced with is that his previous people who have purchased units in those projects, he has to revise the prices of those units as well. So it is very important for him not to bring down prices, and if he can bring down prices across the table also, or if you do a bulk deal, the fact of the matter remains that there is no buyer really in that segment. The buyer is really wanting the project to get completed. Ensure he'd rather pay a premium for a ready property than buy an under construction property today, which is of a category B developer. I have to emphasize on that, because category A developers are witnessing the unprecedented sales. If you look at the Godrej's of the world, the Tatas of the world, because there is so much consolidation that has happened in this space, and shrinkage of developers has happened. So the new launches that are happening, the best advantage that is going to is the category A developers, the branded developers who are being able to bring the right sizes and come out with good pricing to sell. So really speaking, bringing the prices down, even if the developer is ready to, that's not a solution anymore, because there's still no buyer. He'll be happy to bring the prices down, but you have to still get a buyer to buy it into that, right?
Fair enough, gentlemen.
That's
I think,
the real problem.
Okay, I take your point. I think that really sets us up very interestingly for the next part of the show, which is what you and I need to do. If someone is looking to invest, and we've given this a certain capital amount, let's say you're looking to invest up to 1 crore rupees in real estate in 2019 for the long term. First of all, A, should you do it? And B, if yes, then what are the pockets you can look at? What are the kind of properties you can look at? We get the conversation going on the other side. Keep it with us. Back after this break.